He did it. He really did it.
I know when it comes to getting paid by these, Apex Trader funding, you're looking to like do it very aggressively. But my best advice that I can give you, especially on the $50,000 accounts, is to take it slow. Set your contracts to 2 contracts. Set your stop loss to $300 maximum, which will give you 8 losses before you'll be wiped out completely, plus $100. Okay, and then your take profit is you're looking for like a $10 range, and we've had a $10 range pretty much the entire day. We've had $10 from here to here. This is more than $10. You've had $10 from there when this opened up to up here where it stopped at. You've had plenty of $10 ranges. This is 14 to 26, so that's another $10 range, and then on down, right? Right now we're heading for this 15-minute 200 EMA that I've been waiting on for a long time. I'm not going to take the trade, but I've been waiting for this trade to happen for a long time. Beside the point, you want to capitalize on your wins and minimize your losses, but at the same time you want to control your trading so that you're not making a crazy amount per day. That's hard to make on a regular basis because they have what's called the 30% rule. Let's go on over to Apex and look at their rules. They don't want gamblers, they don't want lucky traders or windfall traders. Windfall traders, for people who don't know, are the people who chase after the 830 push. Like the video that was posted the other day where the guy's trying to windfall trade and he ends up losing probably like $400,000. And you see everybody go from to oh. Yeah, that's a windfall trader. When you're just trying to trade massive jumps in the market that happen at certain times or during news. Erratic traders, you're trading 10 contracts, 2 contracts, 1 contract, 4 contracts. They want you to have a consistent system in place to get you paid. Okay, and this is to protect not only you, of course, as a trader, because they want you to be consistent, but to protect them as well. Because if you take a 10 contract trade, right, and you don't have a stop loss on there and that thing falls, like let's say really quickly $6,000, they have to eat that loss. Yes, they're going to cancel out when it finally slows down to a stop, but they have to eat that loss. So of course they're going to protect their earnings. Looking for $10 moves, and then of the $10 move, on average you're trying to take $300. So on average you're trying to take $3. So on a smaller time frame, you'll see what that looks like. So we were starting to push down right there, be 1, 2, 3, we'd hit the 200 EMA. Actually, that would be whatever, that's $5. We'd hit the 200 EMA. I would get out of the trade there just because of a lack of confidence in the fact that we might push back the other way, right? Get underneath it, you're going $1, $2, $3, and then you see if it, after you hit $300, you see if it'll go any further. So I'll protect myself right here at the $300, and then we'll see where it goes, and I'll just keep sliding my stop loss until I hit my take profit area. And then if my take profit, now once you get past your trailing threshold and you're into that area where you're like making money for the actual account, yes, you can be more aggressive because the more money the better, but at the same time think to yourself, can I attain this amount on a regular basis? If I get $10,000 today, right, and now my balance is $12,000, but when I go to actually get my payout, they would deny me because my balance of the balance over 30% of it came from one day. The $10,000 that came from one day was never matched by any of your other days. They want a consistent trading pattern. Once you get past your 3rd month where it's all your money at that point, do whatever the heck you want. After you hit month 3, I don't care if you're running up $50, $60, $70,000, because every time you pull out of there, you can pull all of it out of there. So get as much as you can. But in the beginning, when you're doing these practices, use the best practice of just stopping your day at a moderate day. Give yourself a little bit of headroom in case you lose some money on a trade the following day or, on another day. And you still should make your 10-day trades. So like the next day, you still should try to trade either micros or the regular trades if you can find a good trade for yourself. Still get your 10 separate days, no matter what. Even if you're not really trading to make $1,000 or whatever the case is, get your 10 separate days by coming over here, micros, clicking on a quick 1 contract order for $3 and $50, and then seeing what happens. Get out of it as soon as you're green, basically, and then move on to like the next day to a better setup. If you find a better setup, trade your regular mini contracts. If you can't find a setup on a day, just go to micros. It's all good. Go to micros, trade micros. But that's it for this video. That's one of my tips to getting paid and on a consistent basis is you have to be consistent. You can't have splash days and then all your days in between are $100, $50, negative $500, but that splash day covers you to get paid. You're not going to get paid. You're going to get denied. And then you're going to be emailing them like, hey, why did I get denied? Is this a scam? No, it's not a scam. They want consistent traders. Okay. They don't want to pay people who scam the system basically by coming in here, loading up 10 contracts and then getting a massive win one day and then losing all the rest of the days, but it doesn't matter because you got that massive win. So like, let's say you make $3,000. Now all of a sudden you don't want to trade because you're trying to protect your account. They don't want you to do that. They want you to continue trading. They want you to grow the account. No, they don't want you to blow it. They don't want you to lose the money. They're not trying to work against you, but they want you to actually make money, because when you're making money for yourself, you're also making money for them, which makes their company grow, which makes the funds that they can pay out grow as well. So, hey, let's all work on this together. Let's be consistent together and let's try to make these wins. Like tomorrow that I made $1,000, I'm going for the other 1,300 that I need to get paid out. Okay, the next thing that I want you to do to protect your account is I want you to come over to Tradovate, right? You're going to see these 3 lines right here that say application settings. I want you to click on them. After you do that, that's going to pull up your accounts, and then I want you to go over your risk settings. Risk settings are very important, especially for your $50,000 accounts. So first, for your daily loss limit. Okay, what I want you to do is break your account down into fifths and then take $500 away from it. So what we're going to do is we're going to make it $400 a day is your maximum loss limit on 2 contracts. That's a $4 move, right? You're risking 200 and 200 or 250 and 150. I would say risk 200 and 200. So you're risking a $2 move into the negative, which means that you need to be very good with your margins. But check this out. If you're doing 1 contract instead of 2 contracts, your $200 risk now goes $4 instead of the initial $2, right? So 1 contract is a great way to make sure that you maintain that balance as you grow your account. And early on, for like your first $1,000, I would say you can use just 1 contract until you get very comfortable with it and then move on to 2 after that, right? So your weekly loss limit obviously is $2,000. You don't want to lose a $500 buffer on your account at any point in time. You're going to make it very hard for you to rebuild your account. Now, with the 30% rule, 30% of your, $50,000 account is going to be $15,000. Let's make sure we don't go over that so that we don't trigger the 30% rule. And we're going to set that to $14,500. If you multiply that times 5 days, that makes your weekly profit target $72,500. And then after that, you just come over here and click on save, and it'll take you back to the main screen. Save, and then click the little X right here in the corner. As you guys can see, there's been some great moves going on today, but we are done for the time being. And I just wanted to, just add that risk factor to your trading so that, you never, even by mistake, blow your account by going over your daily trading. And listen, when you hit that daily drawdown, if you hit the amount of $400 loss, you need to stop for the day. One, it's going to mentally affect you, and you don't want to revenge trade, and you don't want to be emotional while trading because it will affect you very strongly. You need to be sharp, especially for scalpers, when you're day trading. But that's it for this video. Thank you guys so much for checking it out. If you have any questions, go ahead and leave them in the comment section. The videos are rolling now. I'm starting to get them out a little bit faster so that I can get you guys more and more information as the days goes on. We had a very good trading day. We're done for the day. And remember, that's the key. When you have a good trading day, don't give any of your profits back. Leave.